In this video, we're going to be taking a look at the very latest and the very best savings rates currently available in the UK. And we've got a couple of new entrants and categories to take a look at in this month's video. Now, before I get into it, I just want to cover one thing very briefly that has confused a lot of people. And it also caught me out, to be honest. I know many people have been waiting for even higher interest rates before locking up their savings. And I was also planning to do the same thing. But what we've seen over the past month, despite the fact that the Bank of England hiked rates at their previous meeting and are expected to continue hiking rates for the coming months, we've actually seen savings rates come down. So what's actually happening with that? Why are savings rates coming down despite the fact that the Bank of England interest rates are going up? Well, what happened is we saw pretty much the market front running what the Bank of England were going to do. So as a result of what happened in September with the mini budget and the market instability we saw, the markets were predicting much higher overall interest rates from the Bank of England. If we look at this line chart here, we can see the Bank of England is the pink line. And back in September, the markets were forecasting that the Bank of England interest rates may peak at 6% at some point next year. And you can see this has now fallen back to around about 4.5%. So because of that, the savings companies aren't willing to offer as higher rates. So it's all about market expectations. So as much as I was hoping that with every Bank of England hike that would come, we'd get better rates, that hasn't been the case. It caught me out, and I'm sure it's caught many other people out. So some people may be considering locking up money at the moment. I personally have locked up about 50% of my money. I've kind of hedged my bets. I'm going to wait to see what happens over the next few weeks, and then I'm going to lock up the rest. So that's where I am. But I just wanted to cover that before we get into the actual savings account. So up first, I'm going to take a look at regular saver accounts. I've got one account I want to share with you guys. This is from First Direct, and they are paying 7% AER on 12-month savings. Now, I usually don't cover regular savers. I'm not a fan of regular savers. So I just don't think it's worth the hassle of having to have a current account with them just to access the savings account. And also, many banks will give you kind of £100 to £200 just for opening an account with them anyway. So what we're seeing is some banks, they use these regular savers as a way of incentivizing people to open an account with them, when you could just basically open an account anywhere, get that cash back, and then do what you want with your savings instead. Or you potentially could do both depending on what savings accounts they're offering. So that's why I don't usually cover them. But with this one at 7%, if you are looking to save a reasonably small amount of money, so their limit is up to £300 per month or £3,600 per year. So if you max out and you save the full £300 per month, the most you can earn in the year is £136 interest on that £3,600. So like I say, I'm not a huge fan of regular savers, but if this suits you, this is currently the market leading rate by nearly 2% actually. This is the market leading rate. So if you want to put a few £100 a month into a regular saver, this is certainly one that's worth considering. So up next, I want to take a look at fixed rates, and we're going to start from 1 year and work our way up. So the 1 year, the best fixed rate that I found at the moment is with Shawbrook Bank, and they are offering 4.3%. Now there is one provider offering at 4.31%, but they have a minimum deposit of £5,000. So for 0.1% or 0.01% difference, I'd rather go with Shawbrook Bank, or recommend Shawbrook Bank, because they have a much lower minimum balance at only £1,000. Now moving up from this is one that is tempting me at the moment. This is DF Capital, and this is a 2-year fix. Sorry, not a 2-year fixed, an 18-month fix. So something quite nicely in the middle between the two. And they're offering 4.6%, which I think on 18 months at the moment is a pretty good rate. So like I said, I'm very tempted, and I may even stick some money in this later today, because 4.6% at 18 month is certainly appealing. Yes, it is down a fraction on last month, but going back to the earlier line chart of what we're expecting now, this rate could actually be quite a good one to lock in now. Next up, we have the 2 and 3 year rates from Union Bank of India, and they're offering 4.65 on 2 and 3 years. Now, these were the provider that were offering 4.31 on their 1 year. But like I say, the minimum deposit was £5,000. But I think if you're locking up for 2 to 3 years, you're probably putting in over £5,000. So I'm quite happy to show you guys these at the 2 and 3 year terms. However, the reviews on Google and Trustpilot and whatever review sites you can find aren't overly favorable. Now, all of the sites I'm showing you should be FSCS protected, so your money should be covered up to £85,000 per individual or £170,000 for a joint account. However, if you do not get a good feeling about a bank, even if they have FSCS protection, then don't use them. So I'm going to show you guys these. But personally, looking at their website and looking at the reviews, I probably wouldn't use them, but they are currently the market leading rates for 2 and 3 years, and also just about at the 1 year as well. Now, next up, we have a fairly new startup, and this is Beehive Money, and they are also offering 4.65 on a 3-year fixed. But the reason I wanted to bring you over to this website is they are offering 4.8% on a 5-year fixed. Now, I think that's quite a good rate, because if the markets are not expecting rates to be much above 4% next summer, and potentially coming down after that, because the Bank of England themselves have said that once inflation is under control, they don't want to keep increasing interest rates. They're probably going to look to cut them. So if you can lock in at 5% or 4.8%, sorry, for 5 years, after probably 2 or 3 years, I think this is going to be well above the market leading rates, providing everything doesn't go completely wrong, which certainly it potentially could do with what I'm seeing in the markets at the moment. But if you have got money that you're happy to lock up for 5 years, 4.8% is not a bad rate to do so. So those are the fixes from 1 year to 5 year. The next up, I want to show you the notice accounts. So these have improved very slightly from last month. So I think last month, if you were locking up money for 30 days, the best was about 2.6% from Zopa. But you can now get 2.8% if you're going to lock up for 30 days. So if you're undecided with what you want to do with your money just yet, 2.8% for 30 days isn't too bad. However, what we're seeing this month is actually some of the easy access or easy access with a few restrictions are actually offering above this rate, which I'm going to come to in a moment. And if you want to lock up your money for a little bit longer, going back to DF Capital, they've got a 90-day notice account at 3.15%. Now, just before I get on to the easy access account, last month's video was really well received and lots of people watched it. So thank you for everyone that watched that. However, a lot of the rates went out of date within a few days of the video being released, as this market moves so quickly. So if you want to make sure you see these rates as soon as I see them, because I basically do the research and record this video same day to give you the most up-to-date information, make sure you're subscribed to the channel and also turn on that notification bell so that when I release these updates, you get to see them straight away. Because if you're watching this in a few days or in a week or two, some of these offers may no longer be available. So 3.15 for 90-day notice isn't too bad at all. So next up, we're going to look at instant access. So this is a new one that's been launched recently. So Chip have been about for a little while, but they used to basically work as an automated savings account, but now they've launched an instant access account with a market leading rate of 2.9%. However, there is a catch. The money you invest with Chip is FSCS protected. However, the interest, or it's not actually interest, they call it a bonus. The bonus they pay is not FSCS protected, and you will not earn additional interest on that interest. So there's no compounding of the interest. So that is the catch with Chip. They do offer a market leading rate. So if you're going to use them for a few months, it's probably great. But if you want to use them longer term, not being able to compound that interest and not having FSCS protection on that bonus that they're going to pay you means you have to kind of mess about doing transfers each month to make full use of this account. So you can do your own research into that if you do want to use Chip, but I just wanted to let you know they are currently offering the market leading rate, and at 2.9%, it's very tempting. I might stick some money in there for a bit until some of these fixed rates get to the level that I want them to be. Next up, if you want somewhere where you do have full FSCS protection and the interest is going to compound, it's only at 2.85% now. Coventry Building Society are offering a limited easy access account. So you're allowed up to 6 withdrawals a year, which actually suits me fine, because most of the time at the moment, I'm keeping money in the easy access account until I get to the point where I actually want to lock some up. So 6 withdrawals per year will probably be enough for a lot of people. And it is at 2.85%, and it is with a brand that more people probably have heard of. And I did submit an application for these guys a few days ago. Now, compared to someone like Zopa or Atom, where it's all on the phone and it's on an app and it's super easy, things are a bit more drawn out. I had to take a picture of my driving license, my passport, and then I had to take a picture of me holding them both and then email them over to them. And that was 3-4 days ago. And apparently I have to wait to hear by post. So it's a bit of a drawn out process. And compared to, like I say, the other people that we're used to using, it's not great. Hopefully people will improve this, especially some of the legacy providers that are offering these types of instant access accounts. But I just wanted you guys to be aware of the process. But if you want full unlimited access with no restrictions, then you do have our Ryan Bank, who are offering at 2.81%, which I think is what they were offering last month. But with the same issue, they still require a minimum deposit of £5,000. So those are the best savings accounts I could find this month. Let us know what you think in the comments. Like I say, make sure you subscribed to the channel with those notification bells turned on. If you found this video helpful, make sure you hit the like button. And if you want to see my exposure of the UK's tax system, as most people do not realise how much tax they're actually paying on their income, and some people are getting caught out for up to 63%, I'm going to pop up a video in front of me now, and I recommend you guys give that a watch.